As you look at 2019 and the global central bank landscape, what is the biggest issue that we should consider as we go into the start of next year? Good morning. Welcome.
Morning. Thank you. Thank you very much, Manus. Well, I think, look, the Fed's on a preordained path to raising the policy rate through to the middle of next year, whilst continuing with its balance sheet reduction. The ECB will end asset purchasing at the end of this calendar year and look to raise rates sometime in 2019. For Japan, I think a little bit more challenging to exit abnormal policy. They have a consumption tax hike due in October 2019. So therefore, I expect monetary policy to remain very accommodative there, probably until mid-2020.
Stephen, very good morning to you. Picking out a few areas that you just mentioned there independently, then the Fed. Big questions as to whether the Fed can land the economy softly, if you like. We spoke last week to David Solomon of Goldman Sachs, the CEO there. He said the biggest issue, the biggest worry for him was overheating in the US economy. Is that the big worry for you?
I certainly think it is a concern. Average hourly earnings are now running at a pace, the highest pace for almost a decade. So definitely, I think inflation is beginning to slowly move upwards within the United States. But I think of greater concern for me is not so much overheating, but it's the budget deficit in the United States. Given where the level of unemployment is at 3.7%, the extent of the budget deficit currently, if we actually saw a slowdown in the US, a material slowdown, then that budget deficit is going to move up very rapidly.
In terms of inflation expectations, where do you think? I was just talking to Nandini Ramakrishnan of JP Morgan about how break-evens in the United States are coming down with the oil price. Previously, we talked about higher bond yields and higher inflation expectations, and then the oil price starts falling, and that gets everybody thinking again. What impact will this oil price retreat have on inflation, do you think?
Well, I think in the grand scope of things, we're not seeing a massive fall in the oil price. I think oil and commodity prices should remain fairly steady throughout 2019. So I'm not so concerned about an immediate fall and reduction in break-evens and in the oil price. But nevertheless, I expect yields to move and trend gently higher. I guess what everyone is looking for is potentially an inversion of the yield curve, which might indicate a recession coming towards us. But at the moment, that still doesn't seem to be the case.
Doesn't seem to be the case right now. When you talk about the R word, recession, what kind of time horizon do you have that conversation over then, Stephen? Do you think about this as something that could happen within the next 2 years, certainly, or do you have a longer time horizon in mind?
I think the general fundamentals of the economy are still fairly strong. Clearly, we're coming off a strong growth phase kicked off by the Trump tax cuts. So some reduction in growth is understandable. But I would actually think that we wouldn't have the likelihood of recession until 2020 or beyond.